And yeah, let's take it one step further. So if Bitcoin takes over the gold market cap, that would bring Bitcoin actually at, let's just calculate it by 20 million coins and a market cap of 10 billion to 500,000 US dollars. I personally think this is a price target which, at least in the next few years, I'm going to hold my Bitcoin forever. I'm holding 95% of my net worth in Bitcoin. But I think this is an achievable target. So thank you so much for these thoughts. But I actually listened to one of your interviews. It was a great one. I forgot the channel. I will put the link down below, where you actually said that Facebook, as a network, which also has network effects, of course, stores social energy, whereas Bitcoin stores monetary energy. And you said something which really caught my attention over there, because what you said there is pretty much in alignment with what I'm personally also thinking or predicting throughout the next maybe 10 years or so. And you said that if Bitcoin stores social energy and Bitcoin stores monetary energy, then Bitcoin should be valued 100 times more than Facebook. So I just checked it. The valuation of Facebook is 800 billion. Let's just round it up to 1 trillion here. And if Bitcoin actually takes over that and 100x's that would be 100 trillion, which actually would soak up somehow the vast majority of monetary energy in the world. And that would bring Bitcoin to a valuation of 5 million US dollars. Was this just a saying, or do you actually also believe that Bitcoin can soak up monetary energy in that regards, that we are reaching a valuation of $5 million per Bitcoin anytime in the future?
I do think, I think that demonetizing gold gets you to 500,000, and that's simply pulling all the monetary energy off of the gold rock from gold bugs who believe that gold is a store of value and a safe haven. But it's important to note there are a lot of organizations and a lot of investors that don't use gold as their safe haven. They use government debt, sovereign debt. And so cash is a safe haven, and sovereign debt is a safe haven. And another safe haven people use as a store of value is an index fund, bond index funds and stock index funds, like the Russell 2000, the S&P 500, the Dow index. So all told, I think there's between 300 and 400 trillion dollars worth of fiat instruments, cash, debt, stock, commercial real estate indexes, something in that range. They're all, if you look at all of that, half of that monetary energy, maybe more, between 50 and 75%, is simply seeking a store of value as a container. Like when I buy the S&P 500 index or the Vanguard fund, I'm not buying it because I equally love all 500 S&P stocks equally in proportion to their market caps. That's not why I bought the index. I bought the index because I had $1 million and I knew if it was cash, it would be debased in purchasing power. And so I needed to put it into something which was going to return more than the economic hurdle rate or the cost of capital. So some people choose to preserve their wealth by investing in gold. Some people choose to preserve their wealth by buying land, a land bank. I'm just going to buy a bunch of farmland. I don't love it. I just bought it. Some people choose to preserve their wealth by buying debt. Like there's like $100 trillion worth of sovereign debt, right? 10-year treasuries, 30-year treasuries, 3-year, 1-year treasuries. There's like $17 trillion worth of debt that's negative yielding. I think the last number I saw. Why would you buy a bond that you have to pay to own? Right? Isn't the obvious answer? It's a safe haven. Is that right? I don't want to bury the cash. I don't want to hold cash. I don't want to bury the cash under my mattress. I don't want to hold metal. And so I'll buy a bond until I figure out what to do. So ultimately, the amount of monetary energy in the world that's looking for a safe haven store of value is got to be between 100 trillion and 250 trillion. Like, why not all of it? Like, why not 300 trillion or 350 trillion, if whatever, the total sum of everything? Well, the answer is, at the right price, I would own a stock because I believe in the stock. Like, for example, Tesla. If you bought Tesla at the beginning of the year, it went up by a factor of 5. And if you love Tesla, and if you believe it's a growth stock, then you invest. You're making an investment decision. I might make an investment decision in a stock that I thought was going to grow faster than the cost of capital. If you believe that a stock can grow its revenues and its cash flows more than 20% a year, you should probably own the stock, right? If the stock is going to outperform the cost of capital. If you came to me and you asked for a loan and you were going to erect a hospital, and I lived in the city and I had kids and we needed a hospital and I was a wealthy person, I would give you the loan. I would buy the bond so that you could build a hospital so that my family doesn't die if they need the hospital. So sometimes creditors would issue credit because they have a passionate belief in the project. And equity investors would invest because they have a passionate belief. That's investment, and that's true crediting. I mean, credit and equity investments. And the same is true with real estate, right? I might buy real estate to live in. I love it. Or buy a commercial office building to put my company in, or a factory. On the other hand, when I'm buying the index of 187 companies I never heard of that yields me 2% or 3%, I'm just looking for a store of value. So that's a long-winded answer to the question, which is, is Bitcoin worth more than the value of gold? And the answer is, yeah, in theory, all monetary energy that's simply looking for a store of value safe haven index should presumably drain out of real estate, cash, stocks, and bonds into the Bitcoin network. And as that happens, the price discovery will return to real estate and bond, right? A real bond should not pay you 0% interest, right? A real bond should not charge you money to own it, right? That's offensive. So the bond values will fall. The equity values will fall. The real estate values will fall. The yields, the dividend yields, the rent yields, the bond coupon yields, they will go up until a rational actor would choose to own those as an investment, or a person that's a passionate investor will own them because they're trophy assets that they simply wish to own, to say they own them for their own personal purposes. And the rest of the monetary energy really ought to be in a Bitcoin network because it's a pure index of the economy without counterparty risk, without execution risk, without credit risk, without debasement and political risk, without the tax risk, et cetera, and the political risk. That's why that makes sense. And that means that the top is more than 100 trillion. It's somewhere between 100 trillion and 300 trillion in today's money. And of course, if we look out 5 or 10 years, there may be 700 trillion in today's money then. So if half of the monetary energy sits in a store of value index, then it could be 300 or 400 trillion dollars.
All right, Michael. So if I put that into perspective, 300 trillion, that would be probably a valuation of 15 million US dollars, talking in today's purchasing power probably. But then if you take into consideration that the Federal Reserve, the People's Bank of China, the European Central Bank, that they are actually printing 24/7, the number itself could be even higher.
There's twice as much money or 3 times as much money. So maybe it would be half or a third of today's purchasing power, or we don't know how that's going to adjust. So it'll be less purchasing power, but nominally more. You're kind of talking about, remember the Vanguard 500 fund or the S&P index? You're kind of talking about creating a cyber index of the entire world global economy on the blockchain, on the Bitcoin network. And what it does is it returns price discovery and rationality to every part of the world that it touches, and it will create a check and balance on unmitigated money printing, and it gives people an option, right? It gives optionality to individuals. If I live in a country on a ranch, or I have money in a country and the country is printing the currency to drive it to zero, and I don't have an option to store my value, I'm going to lose everything. But if I can swap my value into Bitcoin, then I'm going to preserve some of my monetary energy. And at some point, perhaps the central bank will say, I guess probably we should stop printing so much money because all of the money is flowing out of our currency into this other store of value. And that creates a check and a balance, and hopefully some goodness, some virtue in the world, a good thing.
Thank you very much. Yeah.